Welcome back. The market continues to zoom higher. Watch out for metal stocks. Something like a Hindalco is now looking pretty smart as well. JSW Steel, Tata Steel. So the metal guys are, back to their winning ways, getting more ground this afternoon. That's the metals index itself. However, as promised, we're going to put the spotlight on the two banks, the PSU banks that are out there to raise capital, Idbi as well as PNB. And PNB specifically is down quite a bit. So let's bring in Abhishek. Abhishek, I mean, for starters, for a change, they're not taking capital from you and me, the ordinary taxpayer. They're going to the market. But what's the problem? Why is the market not happy?
Well, Surbi, weak demand for both the QIPs is what sources tell us. So, the likes of LIC and other PSUs entities are expected to fill substantial portion of the QIP. Even in the price, the discount, to the offer price is very high for PNB. It's about 8.5 to 9%. Coming on to IDBI Bank, they have launched a QIP of 2,000 crore at an indicative price of about 38.5 per share. So, if you take into the calculation, the tier 1 ratio increases by 127 basis points. Their book value rises by 1% to about 33.5 per share. With an equity dilution of 5%, their net worth will rise by close to 6%. So key stake movement now, if LIC participates or not participate, that's another story. But right now, LIC stake might come down to 48.6 versus 51, and Government of India's stake will come down below 45% from current level of 47% plus. Coming on to PNB, they have launched a QIP of about 7,000 crores. Indicative price is about 35.5 per share. The calculation shows that tier 1 ratio will rise by 113 basis points. However, book value will decline more than 10% given the fact that there is an equity dilution of 21%. So Government of India, that stake will reduce to 70.8 versus 85.6 earlier, and net worth will increase by 8%. Back to you.
Okay, thanks a lot, Abhishek, for that. Prakash, I wanted your thoughts. So here's another sector and stocks that have rarely, created any wealth for investors. And now we've seen very weak demand for the QIP as well. What would you do with these names?
No, I think it's best to stay away, Sonia. There is not much merit given the kind of alternatives that you have within banking, within financials as a whole. I don't think this anyways merits attention. The other problem with most of these banks is that they're probably raising equity at a time when, the first round is already over, where it was much more beneficial to be able to kind of shore up your balance sheets. It's a bit too little, too late. And I don't think this is going to make any big difference in their performance or any improvement thereof. So best to keep this as just an event that will just pass off.
Okay, so that's a take on some of the PSU banks that are in the news today. Prakash, I'm sorry, I'm going to get back to food. Not because I'm hungry, because that's where the market's attention is. We've discussed the burger boys. This frenzy that is visible on a lot of other consumer stocks today as well. Some of the smaller names like Speciality, Pratap Snacks, and all kinds of stocks are moving higher. Within urban discretionary consumption, is there anything else that you'd like to look at, or do you think this is just the market getting, as usual, ahead of itself with the money flow?
I think the anticipation of the vaccine and all the benefits thereof being probably bought into a bit too soon is my view. And what happens is, when people realize that there is a particular theme that has been discovered, there's this whole band of followers, and Burger King has been the Pied Piper for sure. So there is going to be a lot of the long tail in terms of interest. In fact, I was looking at some names which I haven't seen appear on the screener for a long time, like Foods and Ends and, all of these which are flying around. But people forget the fact that there has to be all the good, salience on consumption. Survey is already priced in most of the stocks. And if there is any revival, thanks to the normalcy after the vaccination drive, it's going to be in government's ability to be able to spend on civic infrastructure, which they have not done. So I would rather see that as a positive side of, the flip side of all this change rather than consumption alone. I think consumption, we have priced in most of the goodness. We've already factored in FY22 numbers in most cases, and that's why justification, as you said rightly, talks about 2, 3, 4 years ahead, which is a bit too far-fetched in these uncertain times. So I would look at some boring stuff like infrastructure, government spends on civic infrastructure like water and sewage and all of those things, which will also start paying rich dividends as things improve.
Okay, well, if someone had had their lunch also, one would have got a bit hungry the way we're talking about food, right? First with Burger King, Vector Foods, Jubilant Foods, all doing so well. All right, of course, Vector Foods not listed yet, but the way that one has sort of gotten hyped and the demand, etc., won't be surprised if that one moves in the same direction. But let's do one thing. Let's go across to Agam now to find out about L&T. It's been trading higher. In fact, it's near the day's highs right now, on the back of orders picking up, and brokerages have written some notes there. So Agam, tell us what are your findings?
Right, well, L&T is advanced by as much as 12% through this month, and this is largely on two factors. One is large marquee orders that have come through. One of them is the Mumbai-Ahmedabad high-speed rail project, as well as the river bridge over Brahmaputra that connects Assam and Meghalaya. And the second one is low valuations. Based on that, we have a couple of brokerage calls which have a buy rating. I start with Nomura, which has a buy rating with a revised price target of 1510. And then they say that valuations are undemanding with respect to the outlook. They also say that the government focus on infra provides good comfort when it comes to growth, and of course the multilaterally funded projects will also be something that will aid L&T going forward. Jefferies on L&T also has a buy, and they've also placed a price target of 1270. Once again, they do suggest that Q3 order flows will be 36% higher year on year, and they clearly left the pandemic behind them. And well, FY21 order flows are likely to remain flat, but this overall is going to see a pickup, substantial pickup going forward, and that's the reason why they're positive on L&T as well.
Okay, all right, Agam, thanks very much for that. Stock's doing well today, and as Prakash said, we have to look at some boring themes as well in the market, not just food, right? In fact, before I take it back to Prakash for a stock check, let's also listen in to what the management of Kalpataru Power told us. We spoke with both Dilip Bilkon and Kalpataru Power, both management sounding very optimistic about a pickup in orders.
Current order book is around 13,000 crores, 13,000 plus crores. And for the current year, we've got more than 4,500 crores, and we are L1 and 3,000 crores. So we have visibility of around 7,500 crores as of now for the current year. We are still targeting a slight growth in the current year compared to last year, a slight growth, which means the second half should definitely grow more on a QOQ as well as YOY basis. As far as revenue is concerned, even on EBITDA, I think we are targeting 10.5–11%. We are in that range.
Okay, so there you heard it. Brokerages on L&T and some of the managements in the infrastructure and power sectors and what they're saying. So Prakash, now we're talking boring. So tell us, I know you've been mentioning a stock, Bharat Bijli, but is there anything else fresh that's coming on your radar, whether it's roads, power, any of these players?
Yeah. So it should be one very clear underlying theme or trend that's emerging from your conversation with these management representatives. Even Dilip Bilkon, I remember in the morning, said that the money flow, the realizations have been far more superior than ever before. Now, what it does is it allows a lot of these infra players to infra companies to bid for projects which otherwise they would have had to factor in a much longer working capital cycle, and hence a higher cost. And that makes things much faster in terms of, using the cash flows positively to grow after a long gap. From that perspective, if you recall 2 days back, there was this order for a company called Indian Hume Pipes. Of course, the name is misleading. There's nothing about pipes in that. It's more of water management for civic infrastructure that I was referring to. And even Dilip Bilkon spoke about diversifying beyond roads into irrigation and things like that. So that's the area that I think is going to be fairly promising and has a little bit of a delta that's available. So Indian Hume Pipes is a small company, 1,000 crores, very well run, decently managed, debt profile. And I think those are the companies that will give you returns which will start clocking returns because of the operating leverage, because they're in a better position. Of course, L&T and all, KEC and Kalpataru and all, of course, have their own salience. But I'm saying the small pocket, the mid-cap pocket also is worth looking at this point in time.
Okay, well, there's definitely something happening in aviation stocks right now. I mean, don't lose sight of SpiceJet. Just pull up that chart. It has suddenly found a new set of wings. In fact, SpiceJet hit a high of 107.3 today. It's not too far away from its 52-week high, and now it's a 50% gain just in the month of December. So that's been a phenomenal run for SpiceJet. Interglobe Aviation as well has been gaining quite a bit of ground. In fact, Prakash, just stay on. We have our next guest joining us. Suvir Chenani is with us. He's the market expert and he has a whole host of stock ideas as well. Suvir, hi, welcome to the show. Before I ask you about your own, stock ideas and themes, you have plenty of them to talk about. Some of these vaccine trades is something that you have been bullish on for a while. And within that, you talk about SpiceJet that has spiraled today, out of control, Snowman Logistics and TCNS Clothing. For stocks like SpiceJet, is it too late to enter now given the rally, or do you think there's lots more to go?
Thanks, Sonia. Thanks for having me. So yeah, no, being late or early, it's dependent on what a point in time you measure it from. Of course, from the lows, it has done very well, but again, from its highs, it is still just about there. Along with that, we've been seeing that SpiceJet has been gaining market share on its consumer space, as well as is being doing very well on the logistics side, and basically carrying goods in its underbelly to transport stuff all over India, as well as it's a play on the Boeing 737 MAX coming back. If the DGC approves it, then it'll get some better terms for the money it has. All said and done, it's a well-managed company. And if you look at the divergence between the way Indigo has moved in the last 6 months versus Spice, there is a big trade. Either Indigo needs to come down or Spice needs to move up. And that's why, it's a big divergence the way these two stocks have worked. That's why I like Spice.
Okay, Suvir, good afternoon. Great to be speaking with you on the show. I was taking a look at some of the other themes that you are closely monitoring, and I know you're positive on housing, this whole residential real estate piece where we are getting good commentary. So tell us, are you completely convinced? Is this just pent-up demand which will kind of, wither away, or is this a turn in the cycle? In which case, how does one position for stocks?
Yeah, no, so my biggest call is the real estate, right? And there are 3-4 things. One is that, there is a 4x bazooka from the interest rate side on companies like DLF, real estate in general. If you look at, when interest rates are lower for longer, it means 4 things for many companies. Number one is that, indebted companies have got lower cost of capital or lower cost of debt. For real estate specifically, when the end consumers buy a house, they don't buy on a ticket value of the house, but they buy on the EMI. And if we all know that the EMIs have fallen from a 12% over a 5-6 year ago to about 7%. So basically the prices or the effective price, which is the EMI, has dropped to half, apart from price correction on the ticket size. Apart from that, real estate has, interest rates have got two important factors on equity as a asset class in general, which is the discount rate really comes down and your implied PE really therefore goes up. If I were to ask you that if you've got a fixed deposit in your bank fetching you 4, 5, 6% pre-tax, then, wouldn't you be happier for a 10% in equity? So the shift or the expected return is also come off. So these are the 4 reasons. Basically, your fixed income is giving you so less returns. Your PE goes up because of very low discount rate. And specifically for developers which are sitting on high debt, the cost of debt goes down. And the most important point, that the EMI, which is the effective pricing, that the end consumer buys, really goes down. Apart from that, we know that this is new phenomenon of work from anywhere, and therefore, if people don't work from office, they would work from home. And we all know in our private lives, we all need maybe 1 or 2 extra rooms. So this is helping us. And finally, yes, these are 7-8 years long cycle, and we are seeing it in data, be it, from the stamp duty price cuts, or we are seeing that the listed companies have been talking about higher sales. So yeah, overall very well convinced. The way to play it is, either play directly with the developer or with the financer. So, in my portfolio, so I'm playing it both the ways. So, DLF becomes basically a marquee stock in the sector. That's one, and Oberoi. And you want to play with through a developer, then HDFC remains as the best play.
Okay, well, by the way, the market is not giving up any of its gains. In fact, the Nifty continues to be 100 points higher now. So it struck a century there. The mid-cap index is up over 1%. So this market is all guns blazing. The other space I wanted to discuss with you, Suvir, was IT. You have emphasis on your list, and slowly and steadily this stock has crept from, about 1,050 back to 1,160. Ahead of the earnings, would it make sense to buy or accumulate some of these large cap IT names? Because the buzz is that the commentary would once again be positive. Perhaps you could get a guidance uptick as well. Of course, all this is just hope, but would you bet on this?
Yes. So I've been talking about IT for quite some time, 6-8 months now. And basically, and it's nothing new that I would say, and what the management of Infosys and all others are saying. Basically, every company is becoming a digital company. Budgets are coming from other lines of businesses, say from operations or from customer service and so on, to fund digital transformation projects. And we are seeing that across all industries. And yes, I would just think that, this quarter results would be strong. Apart from the fact that, this sector, as I call it, it's anti-fragile, because, the costs are really coming down, because the key raw material for this sector is people. And as the supply of people expands because of work from anywhere, the cost of raw material goes down. So cost is coming down, revenue is looking up. And of course, the balance sheets and cash flow generations of all these companies is very good. Of course, given that, if you're running a portfolio, where do you see bigger gains? So to my mind, that is in real estate, but I also am playing tech, and now I have Infosys as the top pick there.
Okay, so that's a thumbs up on Infosys. So we're on a broader note, I mean, the kind of frenzy that now we're beginning to see, even look at it today, 100 points, 120 points, just doesn't matter, right? We're in that kind of a market phase once again. Does that worry you, bother you at all, or are you just comfortable going out there and, deploying incremental cash?
Yeah, no, so yeah, I'm not worried. Of course, we are seeing that India is managing the COVID cases very well now. Maybe we get into a second wave, but who knows? So let's be optimistic rather than pessimistic. One can paint a bear argument that after 3-4 months, we will see again a big spike. But we know that this is also coinciding with the rollout of vaccines. So hopefully the risk rewards are favorable, that, the tech, the market should hold up. But again, it's a play on interest rates, really. It's, when interest rates are so low, there are winners and losers are the fixed income markets, and gainers are the equity markets, for the reasons that I stated earlier, that your hurdle rate really goes down, so you're better off with equities, and your discount rate also goes down, so your implied PE goes up. And this is very fundamental. There's nothing wrong with this, argument that, your implied PE. So people say that, markets are so expensive, but they're comparing with its own past. But they forget that the past, interest rates are very high, and now interest rates are very low. What will make me turn is when inflation really crosses 8%. So negative real rates is fine for now. But, if there is the negative real rates become too much, inflation crosses 8%, and the central banks then start tightening, that'll make me turn. And otherwise, fully invested as much as I can. And apart from that, of course, play themes to generate that alpha.
Okay, Suvir, thanks a lot for joining us and speaking about so many of these themes that can generate alpha for our viewers. Many of them are actually buzzing quite a bit as we speak, and so is the market. So let's take a quick commercial break on that note. But don't go anywhere, lots more coming up. When we come back, we'll have our favorite segment, the Street Chatter, to talk about what's happening in the dealing rooms and individual stock ideas. We'll also get some buy today and sell tomorrow calls from our experts. Stay with us.